Good morning, good evening, or good afternoon. Welcome back. And if it's your first time, hello, nice to meet you, and I'm glad that you're here. Today's video is going to be paying cash for a home or getting a mortgage. One versus the other. What is better? Paying cash versus getting a mortgage might benefit you, but it actually might not. Stay tuned because I'm going to have all the scoop and you're going to find out whether or not it's actually going to cost you more or save you more if you do one versus the other. Also stay tuned because I have an announcement at the end of the video. Before we dive into the benefits of cash and how this can dramatically help you when it comes to real estate, if you are enjoying the video and liking the channel, be sure to like the video and don't forget to subscribe because you don't want to miss out on getting all the scoop. So paying cash is king because, number one, I always think you should get an appraisal, but what if you don't think you need one? If you're paying cash, you're not forced to get an appraisal, which might be $500, $600, $700. So right there, you're saving that if you pay cash versus actually financing. Another example would be, it's very common that lender fees are several $1,000s. If you don't have a lender, you're avoiding a mortgage and you're paying cash. On top of saving that appraisal, you're actually going to save potentially thousands of dollars in lender fees. Another great example when cash is king is leverage. Let's say that you are in a multiple offer situation. Let's say that one buyer wants 100% financing and has a pre-approval letter and is going to close in 60 days. Let's say that you make an offer that might be $10,000 less than that other buyer, but you're closing in maybe 5 or 10 or even 15 or 20 days, and you are not contingent upon appraisal and you're not contingent upon financing. What would you choose if you were the seller? I know what I would choose in that example. Another reason would be, let's say that you want to buy a blighted house or a home that is not in good condition. Those are actually hard to finance when you find those. But the other flip side to that is they're usually priced pretty phenomenal and might have a great upside of being a good investment. If you have cash in this instance, it's another instance of where cash is king because most people who don't have the option and actually have to get a mortgage might not even have the opportunity to buy such a property. You can buy it for cash, get a good deal, put some money in it and prove it, and actually make a really good return on your investment. Which actually leads me to my next reason why cash might be better for you. Let's say you do buy that blighted property or property that's just really not in great condition because you plan to repair it, and you want to avoid a construction or a renovation loan, which have wonderful places for many examples. But if you've got cash, construction or renovation loans sometimes can be higher interest rates. They always have more costs because there's more inspections and more appraisals involved. So you can save money on those appraisals, inspections, and closing costs if you use cash in this example to purchase the property and avoid a construction loan. You might have picked up on this when I was talking about leverage, but in case you missed out on that, quick closing. If you're buying something and financing it, it might take you 60 days to close and you can pay cash and close in 5 or 10 days. That gives you plenty of time to move on with life and go work on other things, other projects, or start doing the renovation or whatever it is, or move in, whatever it is you're gonna do to that house that you're paying cash for. So cash would also be king when you have the opportunity to have an aggressive, very quick closing date. And last but not least for this category of cash is king is the fact that wouldn't it suck to get a loan denial? It really would. You can avoid that rejection altogether. You pay cash, you are approved. If you are enjoying the video, please be sure to give it a like. Don't forget to smash that like button and don't forget to subscribe to stay tuned on all of the scoop. Now I'm going to discuss the benefits of actually getting a mortgage instead of using your cash, and there are actually a few of them. Let's dive in. Here's the biggest one. I'm going to lead with this because I feel like it's the biggest one. And I'm going to simplify it more than it should be, but I want it to just be simple so that everybody can follow along. Let's say that you get a $200,000 mortgage. Let's say that you pay a 3% interest rate and you do a 30-year loan. You're going to pay on average at the beginning of the loan, because it does change and you start to pay less interest the longer you're in the loan. But In the beginning, you're going to start with about $500 of the monthly payment going toward interest and not toward principal. What does that mean? The $200,000 loan in this example would cost you $500 in interest in those particular months. Well, let's take that same $200,000 and say that we got the mortgage and we're paying $500 a month in interest. Now, let's say that we took our $200,000 and we put it in the market. There's lots of markets, lots of ways you can invest, keeping it simple. Let's just say that you make on average 6% annually on this money. Now, there are some people making 7, 8, 10, 12%. I'm only showing you 6. That $200,000 at 6% per year is $12,000. Divide that monthly is $1,000 a month. Yes, you're paying $500 a month, but you're making $1,000 a month. So you're ahead $500 a month, and that does not even take into consideration that you're likely going to have a mortgage interest write-off on your tax returns. And that may mean that 3% interest rate, the effective rate or the actual rate after the tax advantage, might really be 1.5%. Or maybe that $500 might really be costing you $300 a month, but you're making $1,000. You can make money on your money, and that is my top reason for mortgaging when you could possibly pay cash. The next reason is leverage. Leverage is everything, right? Let's say that you want to be an investor. If you took $200,000 and you just bought one property, well, you could take $200,000 and put 20% down on 10 properties. Use your leverage. Yes, you're going to have mortgages. Yes, you're going to pay interest. Yes, you're going to have notes, but ideally you're going to be renting those properties out and making a profit. So leverage is that next reason where actually a mortgage might more benefit you than paying cash. The next thing is really not having your cash on hand. If you go and put it all into the house and it feels great, believe me, I'm like one of the loan officers that it's kind of weird because I get so excited when people pay their houses off. It feels great and there's benefits to that, right? But if you come into money or you've saved your money and you dump it all into a house, I cannot tell you how many times a year I am financing people who are pulling cash out of their paid off homes that are mortgage free because they didn't keep enough of a nest egg. If you've got $100,000 and you've got a medical situation that's gonna cost you $50,000, you're gonna be okay. But if you put $100,000 into your house, you're gonna have to pay fees, get mortgages. How long is it gonna take? Is the money gonna be available fast enough to fix your medical situation? I mean, it makes sense, right? Last but not least for today's video, I'm going to talk about delayed financing. Most people, including lenders, have no idea about this. It is very cool in my opinion. What if you thought about having the best of both worlds? What do I mean by that? What if you paid cash for a property using your own money? You got a great deal because you could offer a lower price, because you could close really quickly and you weren't waiting on lender approval. Right? So you obtained the property, you got it, you paid your cash, you avoided lots of extra fees, and you also avoided extra time or waiting. But you don't necessarily want to tie up all that cash for a long period of time. There's actually something called delayed financing. See, typically, when you go to refinance a property that doesn't have a current mortgage on it, and you're refinancing it and taking money with a new mortgage, it's called a cash out refinance. I've talked about that in other videos. That cash out refinance has higher interest rates and sometimes more fees. If you use the right terminology and the lender knows about this delayed financing, which is what it's actually called, you can actually refinance, pull the money out, not all of it, you still have to leave equity in the property, but pull money out. Your equity is going to be based on the price you paid, not the value. So if you paid 100, it was worth 200, doesn't matter, your loan to value will be based on the 100 in this example. But now you can actually get most of your money back, not have been tied up, not had to pay fees twice because you had a lender twice, got a better deal on the property, and closed quicker to start your repairs, renovations, or move in, yet use the delayed financing mechanism to actually put some of that money back in your bank for a rainy day. My quick little exciting, it's not a truly full-blown announcement, but it's kind of like a little teaser for you. I will be dropping very soon my first course, and it is Homebuyer 101. It is tremendous. It's amazing. I've got 17 years of blood, sweat, tears, and more importantly, passion into this project, and talk about a wonderful, wonderful benefit to anybody who decides to purchase the course. So keep an eye out for that. Don't forget to check out today's free download. I'm going to put a link in the description to the video. If you like the video, please be sure to leave me a comment. I always look forward to hearing from you all. Please type in a big WIN, W-I-N, in all caps if you found this video beneficial. Thank you for watching. If you have not subscribed yet, why not? Go ahead and do it. What's it gonna hurt? Seriously though, subscribe to the channel. Don't forget to hit the bell to be notified. Please do share these videos and the channel with your friends and family to help me spread my mission of mortgage peace. And since you're here with me today and you're visiting anyway, stay a little longer. Check out some of these other videos. I'll drop some links up here.